FX Nation, what's up, guys? Welcome back to the channel. Welcome back to another video. And in this video, we're going to take a look at some of the trades from this past week. Let's go ahead and review some setups here, and let's take a look at what were some of the best trades that you could have taken this past week. All right. So without further ado, guys, let's go ahead and get started. All right, guys, so we're looking at euro pound for actually the beginning of the week. So this is Sunday, Monday. So we have the Asian session here, and let's take a look and see what happens. And I want you guys to notice a couple different things here that starts to happen during the London session, really, is that the first thing is, number one, the actual range is literally like 8 pips. All right, so it doesn't really give you like much to go on when it comes to looking at let's say potential type 2 or type 3 setups. It's really just, it's so tight, the range, that we really want it to move outside of that so we can get a clear setup. All right, so as you can see here, as it's moving through the London session, it's literally just moving within that specific range, still of 8 pips, moving straight across, right? And here we go. Now we're entering the second half of the London session, getting close to the opening of the US session, and just look at what we end up getting here. 645, 715, 730. All right, so 4 candles straight across. Can you see the pattern? Type 1 setup, W formation here, and it's pinning to the 200 EMA. Now, if we bring in other tools to help us kind of confirm all this, right? Let's say bring in a TDI or something like that. You can see that if we go back like one candle or so, you can see the TDI here hasn't crossed yet until we get to the next candle, which is this one here, and that's when you see it cross. All right, so you have essentially a couple things working in your favor to help you determine whether or not you should get into this trade. For one, you have the pattern itself, right? So you have a type 1 pattern, W pattern, and then you also have essentially it pinning to the 200 EMA, which is another good sign of or a good confirmation of a reversal here. And then also you have the cross on the TDI as well, of the green and the red line here. So we have all those signs, and then finally we get the last one, which is basically on this second candle here, which would be the cross of the 5 and 13. All right, so those are all your signs to actually take a trade. Okay, if you take a trade, this is what it would have looked like here for you. So I mean, your stop loss would have been really short, which is awesome. So literally we're talking about like 7 pip stop loss, and then of course your first target would have been 30 pips, which is right here. And I mean, you're getting, just out of this one trade, let's say 30 pips, you're getting a 4-to-1 risk to reward ratio, which is ridiculously good risk reward ratio. Anything over 2-to-1 is really good. So let's take a look and see how far up we end up going here on this particular trade. And as you can see, guys, one of the things I want to make sure that you guys understand is that when you're right on the movement of the market, this is going to go for a good anywhere from 2 to 6 hours straight, just slow and steady, slow and steady, slow and steady. So this was at what, 7:45, 8 o'clock, and this is working all the way through like noon already. Whenever you get these trades right, guys, whenever you see, you know, the things happening just like how they are here, you have all the different factors that just are telling you, hey, you know, this is a good setup. I mean, it's going to go in your favor, and it's basically no drawdown, right? Because you're literally trading with them, with market makers. So on this particular trade here, I mean, this is already like 1 o'clock in the afternoon. This ended up going all the way to 50 pips. How you managed it, you know, obviously completely different. Everybody is going to manage the trade differently. If you want like exit strategies and stuff, I'll link a video that I did for exit strategies on these trades. But on this trade, you definitely got, you know, at least your 30 pips if that's what you were trading for. So very good example of a nice clear setup. And these are the setups that you want to look for, guys. This is why I tell you guys all the time to be as picky as possible. You want to be as picky as possible because there's no reason to trade your own money that you've worked your ass off for if you're not sure about what you're looking at. So just make sure that you're doing that. But let's take a look at another one. All right, so we're still on Euro Pound here, and same thing, Asian session here. And let's take a look and see how this plays out here after the Asian range. Now, a couple things, you can see this already starting to look like something, right? As we play it forward, you can potentially see an M formation here. Now, if we start to check other tools, right, like let's say the TDI, you can already see the crossover. It literally just happened. So if you were thinking about a potential trade here, you would be going, let's say, short, and your stop loss would have needed to be above this high point here, so about 7 pips or so in this case. Here's probably the first problem that we run into is the fact that, you know, if we're going to use 30 pips, right, we're gonna go way past our one of our take profits here, one of our main take profits here, which is the 200 EMA, when we can use it in our favor. So because of this, if you're thinking about taking this trade, all right, you need to be very careful and alert in the fact that, you know, just going to, let's say, the 200 EMA will get you a 2-to-1, but it's only getting you 13 pips. And that's not what we're looking for. We're looking for at least 30. Okay? So if you take this trade, just be aware of these things that you're looking at. Be aware that, yeah, you're getting a 2-to-1, but the 2-to-1 is based off of the 6 pip you know, stop loss that you have. So we're only getting 13 pips out of it, which is not what we want, right? However, this, you know, this has a pattern here, and of course this has the crossover here. Now this is probably about 315 or so, but let's see what happens. And you can see it gave us the M formation, it gave us the M formation here, but as you can see, it came all the way down close to the 200, but not quite. And this is what I'm talking about. So you need to make sure that whenever you're looking at these setups, and look, they may look like good setups, but just be aware, all right, that this range itself is only a 7 pip range. Okay, so very similar to the previous example that we looked at. You know, the fact that we're getting a 7 pip range we're going to be looking for price to actually take action either above or below this this Asian range, because of the fact that it's only 7 pips long, right? So because of that, when you're going into, let's say, a type 2 setup like this would have been here, you know, the pips that you're getting out of it really aren't going to be very good, because of the fact that the Asian range is so small. So typically when the Asian range is very small like this, 10 pips or below, even 15 pips or so, the type 2, type 3 setups aren't the best types of setups that you're going to find on here. The ones that we want to find on these types of Asian range is going to be type 1 setups. We want price to move away from this range, either below or above it, right? So if we look, we actually got the setup that we wanted, but we had to wait for it, just like we did in the previous example. So 630, 645, 715, 730. Okay, what does that look like? Boom, nice W. We have the crossover here on the TDI as well, and then we're also, same thing, we're pinning to the 200 EMA. Okay, so we're pinning to the 200 EMA, and that is going to be the setup that you want on these tight Asian ranges, because the Asian range that you want typically is about 25 pips. That's the, you know, about the normal average daily, you know, average Asian range, excuse me, for this. All right. And so of course, if you have a type 2 setup that's, you know, at the top, you can at least take it down to the bottom of the range, let's say, and that'll at least give you 25 pips on a normal range, you know. But with these small tight ranges, you just need to be aware of what's going on. All right. So we do end up getting a trade setup, but again, it's the one that we have to wait for because of the tight range that we're in. So this one here, we have a W pattern here, type 1 setup. We have the crossover here on the TDI, and that crossover happened right there at this, basically at this candle. So right there at that candle is when we get the crossover. Now if we're going long on this, your stop loss is going to be below the perceived low here of the day, and also below the 200, that we can use it to your advantage as protection. So if we're gonna do this here, now we're taking about over a 3-to-1 risk to reward ratio, which is great. So let's see how we do on this one. And I mean, it just keeps going. So you got your 30, you got your 50. So it got up to 50, about close to 60 pips. And it went from, what, 7:30, 7:45, all the way to 10 o'clock. So that was your trade set up there for that. All right, so up to 60 pips on that particular trade. And the most important thing, guys, is remember that the setup here with this Asian range, I want you guys to start adding this to your knowledge here, guys, of knowing what this Asian range is in pips, because it can tell you essentially what kind of setups you would want to look for. So if you're getting a tight range here, you know specifically that you want to look for type 1 setups. We're not interested really in type 2 or type 3 setups, because the range is so tight, it's going to be very hard for you to decipher it. So let's take a look at one more. Alright guys, so we're looking at pound NZD, and here's our Asian range, and let's take a look and see what happens on this one here after the Asian range. So you can see price is basically now right at, so let's say 3:30 or so, right at the open of London. It's now pushing and working its way up. Now, interesting thing I want you guys to notice is how it pushes up, but then it stops right at the 200 EMA. Okay. And so if you look, what is the pattern that you see here that it's producing? And this Asian range, by the way, is about 35, 38 pips. But if we go to the line chart here, you can clearly see, I mean, you don't even need to go to the line chart, but you can clearly see we have the first leg here, and then now it's building a second leg. So I want you guys to notice something, how this is basically dancing right at the 200 EMA. It's just bouncing back and forth, back and forth, back and forth, back and forth. Okay? This is them just basically, these are market makers just basically collecting contracts. Okay? That's all they're doing here. They're playing with you right here. That's all they're doing. Playing. Okay? Now you see they make an aggressive move here on this particular candle. Why do you think they do that? Okay, is to convince people, breakout traders, to trade, to go long on this particular trade. Okay, it's the only reason they do that. They figure if they make you think that they're gonna break past this 200 EMA, guess what? You're gonna go with them, right? And you're gonna trade long. But in reality, that's not what their move is. Okay, their move is basically to make a first leg, a second leg, and then drop. And so what's the setup look like essentially on this particular trade? So that's what your trade setup would look like on this particular trade. Now if you bring in other factors like, let's say, TDI or something like that, you're going to see something that I want you guys to notice, is how this TDI is basically flat, going across flat, and it's basically riding the middle yellow line. One of the factors when trading, when trying to use at least TDI to help you with confirmations, is you want to make sure that if you have a cross of the green and red and it crosses over the yellow line, that's a good confirmation for it to continue to drop. Okay, so we had the initial first one here, right, on the first leg, but then we get the second one down here. And as you can see, as we start to play this out, they just go and go and go. Once they have enough contracts, they're not coming back. All right, once they have what they need here, they're not coming back, guys. So this is why they play from 4 o'clock to 6:15 for 2 hours and 15 minutes. They play, collect. They push up to collect the last little bit that they need, and then boom, they move down. That's all that they do. All right, that's all that they did here. And on this one here, with 129 pips, 129 pip move. But in order for them to make this move, they needed to sit there for 2 hours and 15 minutes collecting. They collect for 2 hours and 15 minutes. They push up for one more final rally and push. And then as soon as they have enough, they move away from them. They're not coming back. Once they have what they need, they're not coming back. Okay? So what do you end up getting? You end up getting a nice type 1 pattern. Okay? You just need to have the patience to hold on to this. Okay? A lot of people would have gotten into this trade multiple times, right? You might have gotten into the trade off of this candle, off of this candle, off of this candle, right? You might have gotten into that trade based off of those little candles right there, off of those rejection candles here. And that's fine. You have a valid reason for getting into those trades like that, because you're seeing the pattern, right? But just understand that they don't work off of time, right? They don't work off of time, guys. They don't care about time. They're going to move whenever they are ready. And in this case, they weren't ready till 6:30, 7 o'clock. because they were busy collecting contracts for 2 hours and 15 minutes right here. Once they got the contracts, there you go. There's your M. All right. So 130 pips on pound NZD. 3 really good trade setups. I hope that maybe some of you would have caught those trade setups. Let me know in the comments if you traded any of those setups, or if you have any other setups here that were very similar to it and you actually caught. Let me know in the comment, guys. I want to know. I want to take a look at those. All right, guys, thank you so much for watching my video. I really appreciate it. One last thing, guys, that I want to let you know is the next mentoring class starts on June 1st. All right, June 1st it starts. If you're interested in it, please go to fxntrading.com and click on Mentorship. Sign up for the waiting list there, and you'll get the details in an email. All right. Classes will sell out. It's very limited space, guys, because I can only teach a handful of people at a time. So definitely, if you're interested in mentoring, it's a 12-week course. So go to the website and sign up for the waiting list, and hopefully we'll see you there. All right, guys. Thank you so much, and enjoy the rest of your week. Guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something. As always, guys, please make sure you subscribe to the channel. Please like and share the videos if you found value in them. And also, don't forget to visit our website at www.fxntradinggroup.com. Once again, guys, thank you so much. I'm truly blessed.